Hello again, everyone. I hope that you had a wonderful weekend, and I hope that most of you did nothing today, right? And as you guys can see, right within the charts, there was nothing that was high probability, right? And yes, we can argue that it has been this way for around, I'd say 2 to 3 weeks now, which is very, very low probability weeks, which usually just give us like 2 to 3 entries out of the entire week across all platforms, right? So that is fine. And, always remember that the dollar that the price action gets, right, that's the closer that we are to, a very interesting market, right? That's when we're very close to movement. Whenever we have these types of dull days, right? In my opinion, if I was the, quote unquote market maker, I would, be doing this exact same thing. Just try to bore everyone, right? Try to get everyone stopped out. Try to allow people to lose faith in their models. And, they're doing a pretty good job at, whatever they are, doing. So on the screen right now, you guys can see, the usual forexfactory.com where we get our scheduled release dates and our times for, liquidity to be injected into the marketplace. Yesterday we had none, which is why, we did nothing. But not yesterday. Today we had none, which is why yesterday we did not do a live stream, right? Now, and going forward, into the discussion that we're about to have, keep in mind that 23 minutes ago, which was 6 p.m. Eastern Standard Time, that was the true week open. So, right, I know that, there's a lot of stuff that you have to be compiling and, putting together. But, always remember that the true opens are of high importance. So tomorrow, which is Tuesday, right, we have news events at 10 a.m. in the morning, right? Won't be as destructive as Wednesday and Friday. Of course, we have NFP this Friday, right, at 8 a.m. So, this week will be, one to talk about. And you can see that we have, for fact, right now, we haven't seen these much red news folders in a week for, some time right now, right? And keep in mind that during this week is not a part of quarterly theory, but it is a part of the doubling theory, right? So this week, if you look at your charts, right, and you select an indicator that we use, the monthly cycle, you will see that, it comes up as a blank week. So this is the Joker week, right? There are 13 weeks in each quarter, which is something that we talked about, which is, pertaining to doubling theory, right? Whereas we have the weeks reflect upon the weeks. Whenever you have, price action which fall within a Joker month or, week or day, which is like Friday, price action tends to be less probable, right? So it's not, it won't be as good as trading the second week of the month or the third or fourth week of the month. Actually, when in pertaining to quarterly theory is designed to give you the, kill zones, right? The kill zones, which are not just, specific to Q2 and Q3, right? It's actually specific to Q2, Q3, and Q4 due to the fact that Q4 usually gives us a reversal. So Wednesday we have a lot of news events, right? So as per usual, we will be looking for, a major reversal during the day of Wednesday, which is the day after tomorrow. And tomorrow we, might get some movement, but I don't think it will be anything that's dropping. Thursday, right? I would, approach Thursday the same way as I, would approach Tuesday. And Friday, of course, we're expecting most of the volatility to be released. Here, right, you guys can see that we're looking at the FX triad, and I don't have to talk about what it's comprised of. You already know that. But I remember, us talking about this gap right here, right? If we see price, so remember now, if we see price break above this gap, right, we will be heading for these highs before even, sweeping this lower, this one. But, in my opinion, right, I'd like to see this low, be taken out before we run above here. But ultimately, right, this is the next draw on liquidity. And, we've been talking about this for some time now, right? That draw on liquidity cannot be, overlooked. But so far you can see that, it's not the, cleanest price action. Even here, we do not have any forms of gaps, which, that tells you already that, this is not high probability price action. This is the fact that there are a lack of gaps, in regards to the US dollar. And remember, the US dollar controls everything for now until, there's another currency that, trumps the US dollar. So in the entirety of last week, you can see that, what happened? Nothing. Right here is consolidation on this day, this day, this day, this day, this day, right? And, up to last week, Friday, price was just stuck within a range. It is still stuck within a range, but, at least it broke out a bit. And, food for thought, whenever you see, price action, consolidating like this in regards to the US dollar, right? And at the same time, you see the index futures market, expanding, right? Don't expect, a reversal, right? So if you get that, you get that. If not, then, we'll talk about it some more. And that is directly, synced to, each market, right? So here you would have the US dollar consolidating for a period of time, and that would send the other asset class in a frenzy of just expanding and no reversal until the US dollar ends up breaking out of that set consolidation. If it seems confusing, we'll, be talking more about it. Don't worry, it's, something that's new. So, don't sweat it. You already have everything that you need. Now it's just me giving you everything, extra. So here, you can see that, right? We dropped a bit here. We broke below this gap, which in the US dollar would be this gap. So here there's already a cracking correlation already, right? So we can expect, right, price to, based off of this alone, to, continue a bit higher within this gap, right? And this is a week which is, might be similar to last week, whereas, you will not have symmetrical price action. So there are times when, you'll have Bitcoin being, bullish. You'll have the FX triad, right, just be going in a complete different direction, such as, the euro dropping when Bitcoin is going up. You'd have, the interest rate triad doing its own thing, being bullish, while the dollar is bullish at the same time. And all of those things are indicative of low probability price action, right? So if price was symmetrical, you would have the euro, Bitcoin, and the S&P 500 going in the same direction. But, it's not. So you're going to have different readings for, all of these asset classes. So, the best thing, what I would actually, want to see if price doesn't break here is a cracking correlation at these lows, right? So this was the low of last week, which, this was the low of last week, right? Which, is very important to me, right? So if we see price, fall below this low, and it could even fall below this low and, give us a cracking correlation, and then we have, something to offset this SMT, which would be caused by price running below this low. But of course, it would not be sequential SMT. So we would want to see the second stage of the cracking correlation be a lower time frame sequential SMT, right? Difficult price action demands difficult concepts to be able to interpret. Now, the easiest thing to read right now, in my opinion, would be the index futures, right? So you already know the layout, and we took the high of July, which is the current month, and the low of the current month, right, to form this range, right? So the most important levels of liquidity right here, and this has everything to do with doubling theory, right? This is not about last quarter. It's about this month, right? So this low right here is important. And this right here, this high right here is important, right? It's basically, what, ICT basically used to talk about, which is, monthly levels, monthly highs, monthly lows. But now we have, doubling theory, which allows us to look for monthly highs being run out. Whereas in another, asset, which is within the asset class that you're focusing on, you'll have a high being left, in the form of a failure swing, which would equate to a cracking correlation, which afterwards you would have what? You would have a precision swing point being formed, right? So it's just us adding more context to the simpler things. Looking at the Dow, right, you can see that price is more compressed here than it is here, right? Firstly, you can see that if we take the center of this high and this low, the center of the range, price is above the 50%, right? Price already traded above 50%. Here, in looking at the NASDAQ, price did not do that. Here, looking at the S&P 500, price did not do that. So here, right, we have price being closer to this low, right, in the S&P 500, in the NASDAQ, than it is to the Dow. So, plain and easy to understand, we could see, price run below this low and create sequential SMT, and then return back within this range. Ultimately, we could see the Dow take this low out, then take this high out afterwards. And, people always ask me, Dave, why don't you, draw and, just give us the charts, we just want, signals. We just want you to show us, a few charts a week, just draw the stop loss and everything. That's because, people take it like there's this guy here that just takes the information, I believe, and I've gotten blocked on Twitter like twice, YouTube like 3 times. But like they just take the information and they act like the information is theirs, right? And I don't just want to be having someone just looking smarter than they actually are. But eventually, yeah, I think that I'll be softening up and doing that. So here, right now, we're looking at the S&P 500 versus the Nasdaq. So as I said, right, you can see that this box rectangle here is, it indicates. Oh man, I have something very interesting to share next month, or maybe this week. Has to do with pi, right? Has to do with pi. It's crazy. Anyways, so you can see that here we do not have, a box right here. This is the 13th week of the month, right? This right here, not the month, the quarter. This one represents Q4. This is not a quarter, right? This is just, a time or, space holder. So now, right, you can see price clearer, right? And this is the 1 hour time frame. You have the S&P 500 here, the Nasdaq here. You can see, why we would expect this low to be taken out right before, seeing some higher prices, right? So it doesn't matter which one takes the low out, but right, we just expect one, because in my opinion, this is the next draw on liquidity, major draw on liquidity, right? We could see price, a news event allow price to push above this high, right? Cause some form of cracking correlation and drop, take this level afterwards, and then, send price higher as a result, if there is a cracking correlation, right? So here, looking at price would be like, and you should be able to see why, we opted to do nothing today. Here, right, we have price just completely, expanding from Sunday's open, consolidated, did nothing here, dropped, then closed back within the range, right? So price literally did nothing, right? It literally did nothing today. This is what, it would look like. That is what it looks like. Low probability price action. But, low probability price action, is a sign that, high probability price action is to come. And of course, the reason why, I believe that it would be better to run one of these highs out, right, which is, the high of today, which is Monday, right? That's due to the fact that our main draw on liquidity is here, right, in regards to this cycle. So here, thinking about Q3 alone, Q2 and 3 alone, right, or quarter 3 on a whole. Here, we had A, right? We had A here, which is accumulation, right? If we have, and the only reason why Q2 of the week would be manipulation would be if we have sequential SMT, right? Ultimately, we can have up to 2 sequential SMTs during the course of a week, right? So if we had one here, then we would expect price to, at least drop below Monday's low, then have Q3 continue, right? Whereas if it occurs, that we have, it being a bullish sequential SMT, which, would take this low out, and it continues higher, then we would expect, another sequence SMT to form, and the next one would form on Thursday, because it usually skips, right? If we have sequence SMT on Monday, then you won't have one on Tuesday. If you have one on Tuesday, you won't have one on Wednesday, right? And if you have one on Wednesday, you won't have one on Thursday. So if you have one on Tuesday, then the next one, highly likely with 85% guarantee, will be on Thursday. Anything before that would be considered fake. So these are the levels that we're looking at. This is a specific asset class that we are focused on for this week. It has the clearest range, right? Not the cleanest price action, the clearest range. So it's it's very obvious, what price would be likely to be doing here. And of course, looking at Bitcoin again, still, right? And since price was here, we expected price to be drawn to these highs. It's being drawn to these highs, of course, still, but right, in a very slow manner. It's just chopping around, which is what you should expect when price is close to all-time highs, right? Once price breaks above here and forms, some form of consolidation above this high, then we have something to talk about again, right? But if you don't get in from this candle, then it basically doesn't really, make sense anymore, in my opinion. I hope that you found this useful, and we will be back this Wednesday, which is the day after tomorrow, right? And with that being said, good luck and good trading.